Hello everyone, thank you for joining us this morning and welcome to this educational presentation of the proper way to calculate your stock position sizing. Now, positioning how many shares you want to buy or sell in a particular equity is very difficult. So many traders just leave it up to a whim as to how to decide. And I'm going to show you how to take the guesswork out of it today, and I'm going to share with you how simple we've made it by applying this simple position sizing tool with our platform. So here's what you're going to be learning today. Edge number one, how to properly calculate risk, because it's really all about risk. So many traders generate their position sizing just by thinking, well, I feel lucky today, I will buy 500 shares or 1,000 shares. Other ones will say, well, no, I feel terrible today, I don't know what I'm doing, I've lost a lot of money as of late, so I'll only buy maybe 50 shares. We're going to show you how to properly calculate risk in determining what your position sizing should be. And the way we're going to do this is by applying our new RPS method. All right, this is something I learned on the floor, but the reason why we say it's new is because on our platform, the PTS Primo Charting Platform, you're going to be able to apply it automatically. So the PTS Primo Charting Platform is the educational portal that automatically generates your position sizing for you. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading for 40 years, and what I'm going to be sharing with you today is a tool that I learned on the floor of the stock exchange. But when I was on the floor trading there, I had to calculate this by hand. It doesn't take very long. It's actually very simple, but we take all of that work out of it for you by doing it automatically. And in today's presentation, I'm going to share with you exactly how you can apply it automatically by showing you some live examples on our platform. Okay, so our whole goal at Specialist Trading, along with Pro Trader Strategies, is simply to educate you, and that's what we're trying to do in all these Saturday and Wednesday webinars. So you can see that we're really not like other webinars where we're trying to sell you some $10,000 system and then throw you to the wolves and say good luck with this market. We really want to educate you so that you can be in charge of your own trading. That's the way I was taught some 40 years ago. Hopefully it will be able to sustain you as well. Now, before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using and applying our RPS method. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite you to follow us on Twitter. If you haven't done so already, there's our handle right there. You may want to copy that down. Every day I post different information from little bits of wisdom I've accumulated along the way to signals that our strategies have generated. And they've generated some great signals as of late. Even in this down market, we've had some tremendous sell signals that really could have helped you. So don't ever let anyone tell you that there's not something you can learn regardless if the market's going up or down. And that's what we do. So feel free to follow us on Twitter. So as I stated in the opening statements, this is an educational presentation. Why? Well, because we are strictly an educational company. We're not here to tell you what market to trade. I know a lot of students, the minute they sign up for one of our courses, they say, Steve, tell me what's the best market to trade, or what is the best strategy you have, or what is the best time frame? You see, this is the way we've all been trained. You want to get your answers from someone or something else. And that's a recipe for disaster. That's why most traders fail. It's been estimated upwards of 80%. What you really should be asking is, give me the proper education. Please supply me with education so that I can decide what the perfect market is to trade, so that I can decide what the perfect time frame, so that I can decide the direction or a style of trading I want to incorporate. You see, you should be in charge and should be making all of your own decisions. Trust me, 41 years ago, when I first started trading, I asked the same questions of my mentors. I said, why can't you just give me your signals that you're taking and I'll just piggyback and buy or sell the same things you're doing? And they told me the same thing. They said, because in order to become a consistent trader so that you can be trading decades down the road, you have to have a plan that puts you in charge, that lets you make the decisions. So at the time, I hemmed and hawed. I didn't like it, but I believe that's what sustained me now for 41 years, being able to trade on my own. So that's why we don't have chat rooms. That's why we don't believe in selling you some $10,000 system that generates the signals for you, that you don't have to do any of the work. We don't believe in that. You have to put in the work through our education, but the good news is I'm there with you every step of the way. So as you can see here, my goal is not to force feed you signals. My goal is not to tell you how to trade. My goal is simply to teach you the things that have stood the test of time so that you can trade with the specialist edge. It's the same edge that turned my trading around some 4 decades ago, and hopefully it will be able to turn your trading around as well. Now, since this is an educational presentation, I do want to take each and every one of your questions, but please wait till the end of class to ask any questions. I promise I'll get to each and every one of them. The most common question is this being recorded? Yes, it is. So if you have to leave early or if you can't see or hear the screen properly, don't worry. We will furnish each and every one of you a link to this recording. This shouldn't be a really long class today, so don't worry. We're not going to take your entire morning. Just want to give you some great information, and then you can watch the video over and over again at your own leisure. All right, with that said, let's begin. Okay, let's get a little insights into position sizing, because I know a lot of people, a lot of traders especially, take this for granted. I know I did when I first started, but position sizing is extremely, extremely important. One of the reasons is because too many traders are undercapitalized. I can't tell you how many times I'll get a new student or someone inquiring about becoming a student of mine, and they say they want to trade stocks or they want to trade futures or currency pairs. I go, that's great. And I said, well, I have the information. I can teach you. You sign up for one of our courses and I can mentor you, whatever you'd like. And then they say, well, yes, I want to learn because I only have about $500 or $1,000 for trading. Now, even though you probably could begin trading with that small size, you'd have to, first of all, paper trade. And that's really undercapitalized to trade the way most traders want to trade. Sure, you could trade some micro futures or micro currency pairs. And most likely you wouldn't be getting these amazing results in terms of dollar amounts, but you'd still be learning. But that's not the way to properly trade. If you want to be trading 100 shares or 1,000 shares, you can't learn that way because you're undercapitalized. Now, secondly, it's extremely, extremely wrong to use discretion when deciding on position size. Now, when I say discretion, I don't mean a certain insight or feel for your trading. I mean discretion where you wake up in the morning and say, well, gosh, I feel lucky today. I really have this strong feeling that the market's going to bounce. It's too oversold, so I'm going to buy everything. That's not the type of discretion we're talking about. We're talking about an insight into experience and learning the strategies and the methods. So it's wrong to use the discretion where you're basically just hoping and praying for something to happen. Now, the RPS method is a simple mathematical formula that must, and I repeat, must be used prior to every trade, because this is going to help you determine your position sizing. Now, the specialist edge here with this particular formula is by adding structure to your trading, you take the guesswork out of position sizing. Remember, you should never be guessing about how many shares, how many contracts you want to buy. You should never do that. You should always have a clear-cut plan. And the way to do that is by using our RPS method. Okay, so let's talk about calculating risk with a percent of capital, all right? People always say, well, you should only use so much percent of your capital for risk. Let's talk exactly about what that is. First of all, as we stated earlier, you must start out with an adequate amount of capital. Now, I can't tell you what that adequate amount is because, first of all, we're not a brokerage firm, and we know there's different cap restrictions for whatever you want to trade. I would simply say that, you should talk with your broker to find out what exactly you want to trade and then ask them what you need in order to buy or sell, especially those particular equities, okay? But it must be adequate in terms of what they tell you. Once again, we're not a brokerage firm, we're simply an educational firm, so I can't tell you the exact amount. Now, secondly, once you find out what that required amount is, if you want to trade stocks, for example, if you want to day trade, if you want to position trade, that's where you get the information from your broker. But once you find out how much you need, and let's say you just need 10,000, okay, just to make a round even number so that we don't have to use all these calculations and everything. Well, you want to risk 2% of that entire amount per trade. So if you have $10,000 in your account, okay, in your account sitting there, all right, you only want to risk 2% of that, which would roughly be $200. So that's all you're going to risk per trade. You're going to risk a minimum of 200, or a maximum, I should say, of $200. Now, as your account grows, well, then your risk will grow as well because you're calculating 2%. So if you get 20,000, well, now you're going to be able to risk $400 per trade. Now, conservative traders can also include slippage. So you can, say if you place a trade in there and you know that on average you're going to have anywhere from 10 to 25 cents slippage, let's say, because you like to trade with market orders, well, calculate that in as well. It's up to you. That's your own discretion in terms of calculation. All right, so here is the RPS stock position sizing formula. We're only going to be talking about stocks today, okay, because this formula can be applied to futures and currency pairs, but it cannot be applied to options. So I know a lot of you, I've done this presentation about 3 or 4 months ago, and a lot of traders sent me emails saying, well, Steve, this is great. How do I apply this for options? You can't use this formula with options. I believe there's other formulas out there, but we're not an option course per se. So this is something that strictly has to be done with purchasing stocks or purchasing futures or purchasing currency pairs. Okay, today we're just going to focus on purchasing stock for stock traders. All right, so rule number 1, you want to determine the 2% risk amount of your capital. And let me just backtrack here a little bit. I know this may seem a little wordy and confusing. Don't worry. Once I start showing you graphic slides on the charts, it'll be a lot easier. And once we go to the live charts on our platform, you'll see how easy it is with our new RPS tool on the platform. Okay, so we determined the 2% risk amount of our capital. All right, remember, let's say we had $10,000, that would be $200. Now, extremely important, you must decide where your stop is going to be. Now, that can be as simple as the recent high if you're going short or the recent low if you're going long. But you have to know where that stop's going to be. You can't just enter a trade and say, well, I'll know when I get there that I should be getting out, or maybe I'll just sell part of my position. You can't trade that way. Remember, we're taking the guesswork out of your trading. You have to have a clear-cut plan where you're going to be getting out if you're wrong, because that's going to help determine be a determining factor in this RPS method. All right. So once you've decided where your stop is, and this is all done prior to the trade. This is all done before you pull the trigger. If you were stopped out, what would be the total amount of points lost? Okay, so if you wanted to buy at 50 and your stop placement was at 48, well, the total amount of points lost would be 2 points. Okay, now divide your 2% dollar risk amount by your total stopped out point amount. Now I know this seems a little complicated, but don't worry, I'll show you some more slides. It'll be really simple to understand. And once you divide that, you'll round off to the nearest number, and that gives you the proper position size. It's that simple. Okay. Let's take it a step forward, and we'll simply show you exactly how to apply this position sizing formula. Remember, RPS method stands for R equals the 2% risk amount of your capital, P equals the point loss if you're stopped out, and S equals the size. So all you have to do is divide R by P, and this gives you S. Okay? Divide R, the 2% risk amount of your capital, by P, the number of points lost if you were stopped out, if you were wrong in the trade, and this gives you S, or the size. All right, so let's have a hypothetical account of $100,000, okay? So imagine we have $100,000, because I'm not the greatest person at math, and it makes it a lot easier to do this. Okay, so R equals the 2% risk amount of our capital. So that would equal $2,000. So we're going to be risking $2,000 on this trade, because that comes out to 2%. Now, remember, 2% is the norm. That's the standard benchmark. If you want to go less, you can go to 1%, you can go to half of 1% or 1.5%, but 2 should be your benchmark. You never want to go above 2, okay? You never want to risk 3 or 4 or even 5% of your capital, because if you have 4 losing trades in a row, well, guess what? You've lost 20% of your capital, which is, that should be a benchmark. You never want to go past that. But if you lose 3 or 4 at 2%, you've lost only 8% of your capital. So that still gives you working room to continue on to trade. All right. So let's say we have a $100,000 account. 2% of that equals 2,000. So R equals 2,000 right here. Now the points lost. What if we're stopped out? Well, according to our plan, we'd be stopped out at 3.25 points. That's how much we'd lose. So P equals 3.25. So what you want to do is divide 2,000 by 3.25. This gives you 615. So that's the amount of shares you can trade. And you can round that off to 600 shares. It's up to you, but 615 is the basic amount you can trade for this particular setup. Now let's go one step further, and with a $25,000 account. Now here's where it gets interesting. So we have a $25,000 account. Now the benchmark is 2%, so we're going to risk 2% of that, which equals $500. Okay, you all understand that? 2% of your capital for trading, not just for this one trade, but your entire capital you have set aside for trading. 2% of that equals $500. Okay, so that's R. The P equals the points lost if stopped out. Now in this particular trade, if we got stopped out, we would lose 5 points. All right, so R equals $500, P equals 5 points. You divide R by P, and that gives you S, or the size. So you can trade 100 shares of this particular equity. This is what we mean by adding structure to your position sizing. Okay, so let's take it even one step further by looking at some chart examples. This will make it a lot easier, and we'll show you a certain situation that you have to take into account when applying this. Here's Yelp. These are older charts just for educational purposes. Here's an example in Yelp. We have a $50,000 account, okay? A hypothetical $50,000 account. Okay, so let's say that our particular method wants to only risk 2%, the standard benchmark. Remember, you can risk lower than that, but you should never go higher than 2%. Okay, so 2% of 50,000 equals $1,000. That's how much you're willing to risk on this trade. That means that's the most you would lose on this trade if you're wrong. Now you have to develop what P is. So let's say we're going to enter here. Where is our stop placement going to be? Well, our stop, let's say, would be right below that particular bar. All right. So we have to calculate what that amount is. That's 1.10 cents. All right. 1.10 points. So that equals P. P equals 1.10. That's the amount of points we would lose if we were stopped out. So now the formula just calls for us to divide R 1,000 by P, divided by 1.10. That comes out to 909 shares. You can round it off to 910, or you can just simply have 900 shares, okay? And you had a nice trade with 900 shares that you could have captured. See how simple this is? And now you've added structure, and now you would have that much more money in your account, and you can increase your trading shares because your account is increasing. Now, when your account is decreasing, let's say you have a series of small losses, well, maybe you won't have a $50,000 account. Maybe you'll have a $45,000 account. So if that's the case with $45,000, now you can only risk 2%, which comes out to $900. So you see how you're keeping with the ebb and flow of your account size. Hopefully, if your account is growing, you will continue to be trading with higher position sizing because you have a more amount to trade with. Now, here's the one thing we want to talk about. Here's a $25,000 account, and we're going to be trading an older chart of Win here, okay? Now, Win has been going down, but we like this, so we want to be a buyer. Firstly, let's position size. We're going to have 2%. So what is R? R equals 2%. 2% of 25,000 is $500. So that's how much we're going to lose here if we're wrong. All right, so let's determine now our stop placement. So we have to determine where we're going to enter. Well, we'll enter right here. We trade one tick above there. That's our entry. All right. Now, if we're wrong, let's say it doesn't go up at all, and then after we buy it, it goes straight down. This is where we're going to be stopped out, right here. Now, how many points is that from our entry to where we're wrong? That comes out to 1.85 points. So that equals P. All right. P equals 1.85. That's the amount of points we are going to be losing. So in order to calculate what our position size is, we divide R, which is 500, by P, which is 1.85, and that will give us our position sizing, which comes out to 270 shares. You all got that? Now, this is the important thing to remember. We have a $25,000 account. How much would it cost us to buy 270 shares? Well, we're going to be purchasing 270 shares at 101.5. So if we purchase 270 shares, that comes out to nearly $27,500. We only have $25,000. So this is where people get confused and they say, well, Steve, I don't understand this. I'm doing the formula right, but I can't buy the amount of shares it tells me. That's because your risk is too great. So here's what you do when that happens. When you want to purchase a certain amount of shares, but it requires more money in your account than you have, okay, here's what you do. You simply reduce the risk. So our risk is 2%. We want to go down to 1% or anything below that. So if your total dollar investment exceeds your capital amount, simply reduce your risk. You can still take the trade. You don't have to alter where you're entering. You don't have to alter your stop. You're just altering your risk amount. All right. So originally we were risking 2%. Let's say we went down to 1%. Okay. So what is 1% of 25,000? It's now 250. So that's the most we're going to be losing now, is only 250, where before it was 500. Now it's 250. We're still going to enter at the same place. We're still going to have the same amount of points we lose if we're wrong. But now our calculation is different. We're calculating 250 divided by 1.85. And that will change the amount of shares to 135. So can we now buy 135 shares? Well, 135 times 101.5 equals 13,700. So yes, we can, because we have $25,000 to use. So see, this is the only flaw in that, where the numbers come out where there's a flaw where that it will tell you how many shares you can buy, but according to your account size, you may not be able to purchase that. But that still would have been a good trade. You have 135 shares, and you still would have made some nice profits to the upside, depending on where you exited. Now, remember, we have made this simple for you. This is the way I had to calculate this RPS formula years ago when I was on the floor. It doesn't take that much difficulty to do. I mean, it take you a couple of minutes to calculate and to divide and to measure your risk, and then if you had to go down in the risk. But guess what? You shouldn't have to do that if we have high-speed computers and programmers now. You should be able to just plot in the numbers and in seconds have that amount automatically generated. So this is the trading educational platform that can calculate your position sizing for you. We've automatically included this in our platform to make it easy for you. Remember, we want you to focus on having structure and having discipline, as well as education and putting you in charge of your trading. And we supply you with the tools and tips and techniques so that you can do this in a matter of seconds. So let's look at some platform examples. Okay, I'm going to show you some real world, and if you want to, you can give me some examples of where you maybe purchased or sold something with your account, and then we'll look at it for you. Okay, but remember, please remember, I'm going to show you a lot of performance results right now on some active charts, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And remember, I'm showing you this strictly for educational purposes only. Okay, so let me toggle over here just to the actual chart. Now let's look at an example here in GM. All right, we're going to look at General Motors coming into December. Now, actually, General Motors is acting fairly well compared to most stocks. It's been actually holding up okay, even though it earlier in the year was doing poorly. But as it's been going up, if we apply our most basic and I would say our most consistent strategy number 4, we simply click on the signal arrows, and we see we've had a couple of really nice buy signals right here, okay, which is great, and you would have had some nice profit. All right, let's say we have a $25,000 account, and we're interested in purchasing General Motors here based off these signals. Based off these signals, we had no idea it was going to go up. It was just a high probability entry area here, okay? Let's say we didn't take this one. We were going to take this signal right here. Let's show you how easy it is to calculate your position size. And first thing you do is come up here to the RPS icon, the RPS calculator. You click it on, and don't worry, you'll be able to move it so you can watch. Let's say we have a $25,000 account, okay? So you simply plug that in there. Now, our percent of capital we're risking is 2%, so it's automatically formatted at the benchmark. Now, you can go below that, 1.75, 1%, it's up to you, but it's calculated at 2%, all right? So let's say our entry point on this particular trade is 36, okay? Let's say it's 36, and let's say right below that, we're going to place a stop just below that bar at 35, okay? So we're risking 1 point, okay? We're entering at 36. We're exiting on a stop placement, if we're wrong, at 35. All we have to do is hit calculate. This tells us that we can buy a total of 500 shares, all right? Our amount of risk is 2%. We're $500, so that's the most we'd lose if we're wrong. Our point risk is only 1 point, as we stated earlier. We're buying at 36, selling at 35. So this tells us we can buy 500 shares. Now, this is the most important portion right here, our total investment, $18,000, okay? How much do we have to spend? We have $25,000. So this gives us more than enough to take this trade. We can purchase 500 shares. We're still in the realm of our 2% risk, And you would have had 500 shares here, and the stock went up roughly about 3 to 4 points in the next couple of weeks. All right. If you took advantage, let's say, of a couple of points, well, that's $1,000 you could have made in a couple of weeks, depending on where you wanted to exit. All right. So you see how simple this is. This takes a matter of seconds. But remember, the most important thing is to first figure out where your entry would be and where your exit would be if you were wrong, if you were stopped out wrong. All right, let me look at another example here. Let's look at Coke. Let's look at KO, okay? Simply type it in, hit apply. And we're going to look at a really nice run-up you had here. Let's take off strategy for right now. Let's look at this nice run because we know we've had a lot of stocks that have been going down. Let's look at this nice run we had up here in November, okay? All right, so we had a really nice run up here in November just because we want to look at some buy setups. And then, as we all know, the past month or so has been really negative, and we can look at short signals as well. But remember, I know a lot of traders do not like to sell short, or they don't have the capital size to do that. And if they want to go short, what they do is they buy puts. Remember, this does not apply to option trading. You can only apply this for actually purchasing or selling the stock. So that's one thing I just wanted to remind all of our students with. But let's say you were interested in KO. And once again, strategy 4, we have some buy signals. We had a nice buy signal down here. We're not going to look at this one right here, but we had a nice one down here. All right, so let's say we wanted to buy this. This is roughly about a $45 stock. Let's take out our trusty RPS calculator once again. And if we're going to buy right here, let's say we would buy at 46.5. Remember, our capital size this time, let's say we have a smaller capital size. Let's say we have 15,000. Okay, we're going to risk 2%. Let's say we buy at 46.5, and our stop is just below that, once again, at 45.5. Okay, and that's it. It takes 2 seconds to figure that out. You calculate it, and once again, we're risking only $300 because that's 2%. Our point risk is 1, all right? The total shares we can buy is 300, and we have plenty of money. We have 15,000, and we only used roughly 14,000. Now, let's say we had another stop placement. We wanted to buy at 46.5. Let's say our stop placement was well behind. We wanted to give ourselves some room. So back here, let's say at 45. So, or actually that would be 44.5 now that I think of it because we'd be below there. So let's say it's at 44.5. So we're going to be risking 2 points now. So we calculate it, and let's see, we wanted to buy at 46.5, 2%. This time we can only purchase 150 shares. We still have plenty of money, see? But we're risking $300, the same amount of money, 2%, but we're only going to be buying $150 shares because we want to keep in line with this calculation. So you see how this changes by where your stop placement is. So many times, if your stop is too close, you won't be able to do this. Let's say you had purchased this at 46.5, and let's say you only wanted to risk a half point. So you place your stop at 46, okay? And you're still using, you have a 15,000 account, using the same parameters. You calculate, and your point risk is a half a point. It says, guess what? You can buy 600 shares. So you're all excited. You think you're going to make a ton of money on this. But how much would it cost you to buy 600 shares? Almost 28,000. And how much do you have? You only have 15,000. So what do? We decrease our risk. Let's see if it would work out if we went down to 1%. Okay, we're only going to risk 1%. We still have our same entry price. We still keep our same stop price. We calculate it, and we can buy a total of 300 shares now, and we only need roughly 14,000, and we have 15,000 to spare. So do you see how this works? You have to edit and alter it, the risk you're having, because you aren't able to purchase that amount of shares, okay? So this is extremely important. This is extremely important to know. Right now, I'm going to open it up. If there's anyone that wants me to look at a particular situation that they were in currently that they wanted me to look at, you can type that in right now. While you're doing that, I'm going to look at another situation here. This is a weekly chart, okay? So just type in the question and answer where you'd be interested in it. But I'm going to look at a weekly chart of Square. This is a stock that's been acting well as of late. It's had some sell-offs, but if we look at a weekly chart, let's look all the way back here. We have a really nice rising from the very beginning of the year, okay? Once again, if we position here with strategy number 4, we had some very nice buy signals. So you see, first of all, this isn't a webinar today where we're talking about our methods, but you can see how well our methods work, all right? Because these are valid signals that would have been generated. These are 2 real great signals for investing or for holding on to positions a little longer. Let's say we had taken this one right here, strategy number 4, okay? And let's say we have a $50,000 account, okay? So let's add the RPS method with our $50,000 account because we're investing, all right? Say on our IRA or whatever, we only want to risk 2%. And our position sizing, let's say we would have purchased roughly at 45, and our stop would have been somewhere below here, let's say at 36. Whoops. There we go. Okay, so that's it. You simply calculate if you wanted to invest in Square in early January, and you could have purchased 100 shares for $5,000, all right? Which, we have $50,000, so you could have a number of trades in your IRA, 110 shares roughly. Now let's say you wanted to change your stop to 40, okay? You only wanted to risk 5 points. Well, you simply hit calculate again, and now you can purchase 200 shares, and you've only spent $9,000. You still have plenty. So do you see how things change when you change the stop price or you change the amount of risk? Let's say you wanted to buy at 45, you would be out at 40, you're risking 5 points, but you only wanted to use 1% of your capital, okay? We calculate. Well, you can purchase 100 shares again, and you're only spending $4,500. It's that simple. You see the ebb and flow. So the beauty of this is that you can experiment with this tool on the platform once you're using our platform, and you can decide for yourself where you want to get in, where you want to get out, where you want to place your stop according to all these rules and regulations, and you can see how the ebb and flow changes, okay? Someone's asking about a short in Apple, okay? I'll punch up Apple for you right here. Let's look at a daily chart. We had some great sell signals as of lately in Apple. Let's look at the stock. You simply punch it up, hit apply, and it automatically appears. Look at these great sell signals we had in Apple, okay? Once again, I know we've had a really strong downward trend in the markets right now. Most people get scared when they see a strong downtrend like this, but anyone who's been trading for a while knows that these are some of the best markets to trade. Why? Because there's a lot of volatility, and secondly, because markets move, I would say, twice as fast in a downward trend as they do in an upward trend. So where you may take a buy signal and it'll take you weeks, if not a month, to reach your objective, in a strong downward market, it may take you just a matter of days to reach your objective because it's being driven by fear. And fear is a lot stronger emotion than hope and by optimism. So you see these moves we hear. Apple at the beginning of November was trading at $205. It's now down to $150. Okay, so it's lost a good 55, nearly 60 points. Now, just 2 weeks ago, at the beginning of December, Apple was at 175. Now it's down to once again 150. So 25 points in a couple of weeks. Let's just say we wanted to short this. We had enough money to go short this in our account. Let's say we had a $50,000 account. Okay. And we want to short Apple, and we want to take this signal and actually go short the stock. Okay, we're going to risk 2%. Let's say we only want to risk 1% because we know that being short is scary to a lot of people, and they don't want to tie up a lot of money. So we go short at roughly 175, and we place our stop at roughly 185. Okay, so we're going to risk 10 points, only 1% of our capital. We hit calculate. And as you can see, oops, I hit a long trade. I did that improperly. We're going short. So now we hit calculate. Okay, we're risking $500 because that's 1%. Our point risk is $10. We're only going to be able to go short 50 shares. But that's going to cost us just about $9,000, okay? So that's all we're going to be really spending on this account. So that gives us plenty more money to buy stocks or to stay on the sidelines. Now, even though we're spending roughly about $9,000, we're only going to be risking $500. Now, let's say we wanted to use 2%, okay? All right, so we calculate 2% of a short trade. Well, now we can have a total amount shares to go short. And actually, this is we can go short instead of buying, but we'll sell 100 shares. and our investment now is 17. Okay. Let's say we wanted to enter at 175 and have a 5-point risk. Well, we can short 200 shares, and we're only spending 35. So once again, you see the ebbs and flows of this. And the beauty of this is that you can figure out what you want to do prior to the actual trade. This is something that you have the capability now on our platform to calculate before even pulling the trigger. So that's why we say we've taken the hard work out of it for you. And this is readily accessible on our new platform. And it comes with our basic package as well. So let's go back to the presentation. Remember, I just showed you a lot of performance results, but they were strictly for educational purposes only. We can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So let's recap before we go to question and answers concerning this. Remember, what is the RPS method? It's a simple mathematical formula that automatically decides how many shares to trade. Remember, when we say automatically decides, we're only speaking about stocks right now. It does not apply for options. So if you trade options, I'm sure there are other formulas. I'm not an option trader myself, and it's not an option course per se, but I'm sure there are other traders who can tell you similar formulas that apply to option trading. There's just too many variables applied with option trading, and it's so many different so different from stocks. Stocks are very cut and dry. You know what the price is going to be, and where if you lose. But on options, you don't know what the value will be because the premium changes and it's different. Now, a very important rule to remember with our RPS method. If your total investment exceeds your capital amount, all you have to do is simply reduce your risk. So if you want to buy a certain stock and it says, oh, I can buy 500 shares for $30,000 and you only have $15,000 in your account, simply reduce your risk. If your standard risk is 2%, go down to 1%, maybe go down to 0.5%. Here's the RPS method. As you can see, we have a $25,000 account. We're risking 2%, the standard benchmark. Our entry price is 52.70. Our exit price is 51.85. So let's calculate. We simply hit calculate, and we're risking $500. Our risk per share is 85 cents. The total shares we can buy is 588. Let's round it out to 600 shares. We're excited, but guess what? It's going to cost us $31,000. We only have $25,000. We can't purchase a total of 588 shares. All right, so what do? We change our risk to 1%, and by simply doing that, now we can purchase this. Now we have the capability, okay, because we're only going to be spending $15,000 roughly, and we have a total of $25,000. Remember, never use discretion when deciding upon position sizing. Make sure your trading is adequately capitalized. You can find this out through your broker, and you can tell them what your wants are and needs. Do you want to be an overnight trader? Do you want to be a day trader? And they can tell you what's required for your position in that particular brokerage account. On average, the standard benchmark, you only want to risk 2% per trade. So whatever your capital is, 50,000, 10,000, 5,000, each trade you will only be risking 2% of that. Now, the RPS method is a simple mathematical formula that must be used prior to every trade. Why? Because it automatically decides how many shares to trade. You don't wake up in the morning and say, gosh, I feel lucky today, I'm going to bet the farm. You're going to have structure. You're going to take the guesswork out of your position sizing, and this will help you in the long run to become a more consistent trader. That's our only job, to teach you these things so that you can become consistent. Remember, our job is not to trade for you. Our job is not to spit out signals so you blindly take them. That is a losing mentality. Our job as your educator is to give you and provide you these tools so that you can make your decisions based on sound, fundamental insights and experience. All right, so we have a great offer for all the people attending today, this Saturday. We're going to give you a 30-day trial, once again, for only $7. This is our platform, the PTS Primo Charting Platform, that has the RPS method calculator. Here are all the things that are included with that. We have our enhanced buy-sell line, which I've given webinars on before. Our 2 short-term trending techniques, which I've talked about before in different webinars. We have a signal scanner where you can scan for these different techniques and over 90 of the most prominent technical indicators. Once again, we know we have a technical bias, but if you are a fundamental trader, not to worry, we have free Bloomberg TV. Just the way we clicked on the RPS icon at the top of the screen, we also have a media icon. it will automatically open up the media page and you can watch live Bloomberg TV with any economic announcement as it's happening live. Okay, this is included as well. We have personalized tech support. Anytime there's an issue with any loading of a chart or how to use a tool, we will be there in a matter of moments to resolve the issues for you. This is a great offer. This is the educational portal that automatically generates your position sizing. So take advantage of this as an end-of-year special, $7 only. You can call Pro Trader Strategies at 310-598-6677. This link you see at the very bottom is the link that will take you there. It's not a live link, but if you look in the chat box, they just posted a live link of that a particular link at the bottom, so you can click that on for more information. Remember, in order to get that calculator, you need the PTS Primo Charting Platform. $7. I can't think of a better deal than $7, okay? Now, as I stated, if you have any questions, now's the time to ask, and then we can, ask anything you'd like, anything you saw about the RPS method or anything you'd like to know more about pricing. I see a question here. The RPS method, can I upload this onto my platform? No, this is something that's only on our PTS Primo Charting Platform. So it's not, like a formula that we give you a link to, or not something you can download onto your own platform. Let's say you use TradeStation or Thinkorswim. You can't do that. You have to be using our platform. And that's the beauty of this. You'll see a signal on our platform, and then you'll just automatically calculate and know in seconds how much you should be buying or selling. Someone also is asking, after the $7 offer, what does the price go to? I believe the price goes to $97 per month, which is still a very inexpensive price. There are some platforms currently right now that don't give you half of the benefits of our platform, in my opinion, and they're charging $250 to $300 a month. And so this is a great offer. Even at the $97, it's still a tremendous discount. And plus, if you contact Pro Trader Strategies, they may be even able to discount that as well, okay? Okay, on Apple, was that for shorting? Yes, it was. When I believe they're asking about the Apple example. Yes, those were actual shorting signals, if that's what you're asking. These are strategy signals. One of our strategies, strategy number 4, our most consistent method, actually generated those sell signals. So those are not something I just put up there. Those are actual signals in Apple, and we have had a number of tremendous signals in this down market. So there's no reason to think that just because we have a down market, signals stop being generated, okay? What is included on the platform? What strategies? Well, the strategies are a different tier, because those are actual courses where you get, personalized instruction on online instruction, and you get to contact me personally via email. Those are included, but you may be able to get a discount for those as well. In terms of what is offered on this, we have a lot of the different techniques and tools that I've talked about. I would say our most powerful tool, which is the buy-sell line, comes with 4 different features. We have our bottom 25% feature, which tells you the short-term trend, also generates buy signals and stop placement. We've talked about those in different presentations. I would contact Pro Trader Strategies for more information. Maybe they can give you a special discount if you're interested in purchasing a strategy along with the platform. You can get a special price for being a first-time student. Let's say if you are, Banu, I'm not sure if you've joined us before. But they have different discounts on different strategies. It's just today we're just talking about the RPS tool, okay? Great question. And remember, there's no obligation. If more of you are interested in our strategies, there's absolutely no obligation. They have trading consultants managing the phones right now. They would be happy to answer any of your questions. People are asking about what are the different markets. Oh, that's a great question. We have now upgraded, and we have new versions of our platform. We have data in the Indian markets. We now have data in the Japanese, Chinese markets. We have overseas and European markets. We have Canadian market data. We have commodities. We have forex market data. So virtually any market you can think of, we have data now. So I know before, when we first started the platform a couple of years ago, it was limited to just a few data sources. But now we have data in just all those markets. So if you like to trade those, the DAX, Indian markets, European markets, commodities, we have the ability to make charts and to generate signals in all of those, okay? So as we conclude here, you see we're offering you a great package here for $7. This is a great way to finish up the end of the year and to find out just what we're about. As you can see, we are not in any way trying to, sell you something for thousands, if not hundreds of dollars. We're trying to give you a chance to become acquainted with us for only $7. Probably cost you less than a cup of coffee this morning. So take advantage of that, and then you can start using this RPS method as early as today, okay? As we conclude, I just want to say thank you so much for taking time out of your Saturday morning. I wish you all the best of luck, and I look forward to all of you becoming students of mine and members of our PTS Charting Platform. Thank you so much. Happy holidays, and I'll see you next time. Bye-bye.